Pleasure, you could join us. I am Pius Kojo Baka. On to our very first story. Banks will in the coming months take steps to review their investment and lending decisions. The move has been influenced by the negative impact of the debt exchange program, which has resulted in some banks posting record losses for the year 2022. Well, this may also affect investments in government bonds. Chief Executive of the Ghana Association of Banks, John Dewa, disclosed this on PM Express Business Edition.
Let's look at the system in the right way. When you say banks are going to do proper lending, banks are not going to relax lending covenants. No. We have shareholders' interest to protect, depositors' funds to protect, and also to demonstrate to our stakeholders, correspondent banks, the regulators, that of course we will operate, we will be lending, but we'll be careful in lending. Being careful in lending does not mean that if there's a good deal or a good transaction on the table, a bank will not do it. Banks are actively in the market looking for deals. So you tell me a businessman who has a very juicy, nice a transaction that a bank is saying no, because banks have liquidity. I can tell you there is adequate liquidity in the system, and that liquidity is looking for homes. And those homes are bankable projects that banks are looking for.
And those projects will not go into government bonds going forward?
Of course, the avenue for the government bonds will not be with us for some time.
But I'm still trying to get this from you, that so going forward, forget about my expression of real banking. Are things going to change in terms of the investment decisions that will guide escrow, and then also investment decisions when it comes to lending, that we are now going to see more prudent lending? As long as a Geography has a good project, a bankable project, you've met all the tick box, we'll be doing more lending to businesses.
I'm sure, given what we have gone through in recent months, of course, the boardrooms of banks will be taking a second look at their asset allocations. That is not to say that there's going to be prescription from anybody on how banks are supposed to allocate their assets. But of course, I'm sure there's going to be some very difficult discussions in the boardrooms of banks around how much of your assets should go into what asset class and for how long, and what the duration and what interest rate regime and the like. But again, you talked about the lending rate and the fact that it is up there. You know, I've said it again.
It's an economic decision.
Right? The lending rate is not like a curtain that you go and raise it and lower it, you know, at will. You know, no, that is not how it works. The rate itself is a derived rate. So it's market fundamentals that drive the lending rate.
Let's now get on to Zoom and speak to the Chief Executive of the Ghana National Chamber of Commerce and Industry, Mark Bedu Abuaji, on development that lending could be affected because of the impact of the domestic debt exchange program on the operations. Grateful, Mark, you could join me on the marketplace. You've heard the president of the Association of Bankers, John Dewa there. What do you make of that development?
Well, I think it's a very disturbing news, a very worrying news. Because largely a lot of businesses in Ghana finance their activities through loans from these banks. So if for any other reason businesses are not going to get this financial support, then it's going to negatively impact their activities and economy as a whole. I largely do not blame the banks, because banks can only lend when they have the money. And with this DDEP, we all know that the assets have been impaired. And so it means they cannot, of course, provide the liquidity support to businesses. And for me, it's also a very worrying situation, because I think not too good. In situations like that, you expect that the businesses will now reinvest their retained earnings. But here is a case where, because of what is happening in the economy, the high cost of doing business, they are not making profit to reinvest. And also, most of them who would in any way would have gotten support from external sources are also handicapped because of our downgrading. So it's a very difficult situation, and I'm afraid that it will not bode well for businesses and also for the economy as a whole.
I'm particularly interested in how bad this is going to affect your operations. Give me an example or a descriptive picture of what this will mean to you.
Yes, it's definitely very bad. Because if you take a typical business, as I said earlier, if they need money to finance, either to expand or a working capital for their activities, and they don't have it, they fall on these banks for these facilities. Although we are aware that interest rates are very high, that is the only option. So normal business will go to the banks. If you take, for instance, the capital market, the Ghana Stock Exchange, only few businesses are able to go there for facilities because most businesses in Ghana, our SM is close to 80%. So usually they will go to these banks. So if they don't have it, it means one, they may not be able to meet immediate financial requirements like their working capital, and they will also not be able to expand. If there are opportunity for them to expand and they need money, they will not be able to do that. So basically, what it means that you will be keeping your activities at the current level, or may obviously have to reduce it if you don't have money, and it will affect your bottom line, your profit, and also the number of people you can engage as employees. So for me, it's bad news. We are looking at how we can circumvent this and ensure that businesses are able to get some level of resources, at least to sustain themselves to a level where things will improve and they will also be profitable.
Talking about how you intend to circumvent things, to work things out for your good, walk me through some of the alternatives you are likely to explore.
Well, as I've said, the alternatives for now is to ensure that you are sustainable over a period of time. So if you don't have money, definitely certain capital expenditures will be affected. And also, if you can't pay the salary, all you have to do is just lay some of them off. And profit definitely is going to be affected. Now, for the banks themselves, they are not making the profits. And I go back to the impact of these three new taxes. Now you are imposing additional taxes on these banks in spite of the difficulties they are going through. So definitely we are saying that we don't want businesses to expand. And for me, if you are not careful, the performance of the economy in 2023 will be worse than what we experienced in 2022. Our GDP performance in 2022 was not good. If you look at the industry sector, it was the worst performing among the sectors. Drill down to the manufacturing sector, which is my major concern, we realize that it also contracted by 2.5%, which means a number of factors, including lack of funding, is also impeding their activities. So basically a survival strategy to ensure that you wait till when things improve, and it may affect businesses and those who are also being employed as well.
Mark, we are grateful for your time here on Business Marketplace, speaking to us there. Now.